Hi, this is Zak Mir, editor of zaksta.com, with a look at leading UK companies reporting the week starting December the 2nd. Starting off with Tesco, and we've got surprisingly weak technical setup here, provided by a dead cross between the 50-day and 200-day moving averages, the 200-day in black, the 50-day in blue, and that has actually worked in terms of breaking the shares down back towards early October support towards £3.40. And the risk here is that because of the overall falling May price channel and the dead cross sell signal, we could head a bit lower, possibly even as low as the June support. But at the moment, probably 335, 340 is the lowest we'd expect, especially while the 10-day moving average at £3.51 caps the price action. So rather negative look to the UK's leading grocer. It's the opposite situation here at ASOS, rising trend channel from March. Very, very strong price action here. Basically, the message here is that it's not really worth thinking of going short. You can have, there were opportunities, there have been opportunities to go short as the shares hit the top of the price channel, but really the situation here is that you'd be best off buying on dips rather than trying to pick the top. Current situation, probably an extended bull flag, and you'd expect higher price action towards the top of the channel, now as high as £69, and that would be a target for, say, late January, early February next year. In terms of going long now, we've got the RSI in the upper 50s, which is just about the right area for going long, and really you wouldn't expect anything below £54, 50, £55 ahead of the target towards the £70 level. Next up, Betfair, which has had a rather rocky ride in terms of its history on the stock market, came in strong and then was sold off quite aggressively. But if you look at the situation since the beginning of the year, things have improved quite markedly. Gap through the 20-day moving average, unfilled gapped there, and no ability by the stock to fill that gap towards the £7 level, which is a strong buy signal. Most of the price action since then has been well above the 50-day moving average, and indeed we've just broken back above that now. The 50-day moving average currently at £10.07. While that supports the stock, we'd be looking for a top of 2013 price channel target as high as £12. So really the risk here probably is sort of 40, 50 pence down to the 50-day line, and the upside £1 to £1.50 over the next 6 to 8 weeks. So a decent setup there for Betfair. Not quite such plain sailing here at Wolseley. The shares very, very rocky. They are in a range which makes obviously trading that much more easy. You could say £31 to £33 or £34 would be the way to go here in terms of range trading. But what we have from my perspective is a rising March price channel based at the 200-day moving average at £32.33. And that would be the zone to buy into on any weakness such as we are seeing at the moment. The target, while the £32 area holds, would be towards the 2013 price channel top at £35.50. So decent situation there, decent setup, even though this is a very volatile stock. To finish up with, and we have Berkeley Group, obviously in focus with the recent housing bubble controversy. The shares have sort of slowed down in terms of their progress over the course of the latter part of this year, but still we've got a March rising trend channel in place, floor of the channel at £22.61, the 50-day moving average, and really while above that, on any dips towards that area, you'd be looking for a buying opportunity to take the shares up to, say, £26, which is the top of the channel, sometime in January. The current RSI, also around the mid-50s, is a positive and means that you've got a decent, hopefully not too volatile entry point or entry zone around current levels or just below. That's it from me. See you again next time.